We're glad to be here. Dan Miller from NetSuite. I think everybody says this, but my real intent here is to actually have this be interactive. How else to be an Agile CFO than to delegate to everyone in the room, right? Just to show you how I intend to create some dialogue, I'm actually going to go to the last slide first, but it really is the last slide. And really, we're going to go through some of these topics. My hope is that at the end, or during, actually, we will have talked about some of these things, and my hope is that, frankly, I'm proud of my experience and what I do and have done, but you all have done wonderful things as well. So we'll come back to these. I won't go over them now, but my hope is that I will hear and we will all benefit from your experience. The topic is around Agile leadership. My view is that I'm not sure it's really a new role. It's frankly a role that should have existed and does exist today and has existed in the past. My mentors in the past have done this role extremely well, and I bring some of that to this presentation. This is the abstract. I'm not going to read it all. I just really want to focus on a couple of things. Really being involved in every aspect of the business obviously is critical to the success of the CFO. I heard in the last session, if you're just in the books, it's not going to work very well. And around efficiency, and we'll come back to that a little bit. My hope is that you leave this discussion, again, all of which you're going to participate in, is in how to better achieve some executive alignment. And I'm going to give three hows. And there are more hows than this, of course, but I'm going to give you three. And that is to make the business planning process transparent. We'll go through what that means and how to maybe get there. And there'll be hopefully some debate on my proposed way of doing it. Real-time visibility, how to get that. That will involve systems, so I'll go into that a little bit. And then how to improve some of the core business processes and how that helps get aligned. Some setup slides before we do that. And I hate to do this, but it actually is quite helpful to know who's in the room to try and guide the discussion a little bit. How many current and or former CFOs in the crowd? So that's a lot. Great. High growth. Currently, are you involved in high growth? Greater than 20% top line. Great, because that will be very relevant in this discussion. Public CFOs. None. So I'll save the S1, SEC stuff, although some of you are trying to, so I bet so. I won't completely leave that out. Global. How many are global businesses today? So about a third. Okay. And then employees, less than 250? So it's going to be half and half. Well, just real quick, greater than 1,000. Okay, so there's some in the middle. Okay, great. Well, anyway, I think it's actually there's a lot of topics in here, and I got to keep moving quickly. But I think we can have some of the discussion on this. I'm going to talk about some of the challenges, how to face those challenges. We're going to do Q&A, but I'm going to kind of do some of the Q&A as we go through here. So I'm old. I have 25 plus years of experience. I am currently the general manager, which is just a useless title, of the software and manufacturing verticals at NetSuite. I'll talk about NetSuite in a second. What that means is I oversee everything from development and product all the way through sales, including marketing, professional services. I will quickly tell you this is not going to be an infomercial session. I'm going to talk about NetSuite a little bit, just because I have to or I'll get fired. But I really want to talk about what I think is relevant, hopefully relevant, and I'm going to try and do it at the right level. It's a tough topic to get too specific because it's people. So how can you be too specific without knowing the specific company? But I am 3-time CFO, public and private companies, most recently CFO of a company called NetSuite that's headquartered in San Francisco. It has offices here in White Plains. Global company, about 30 offices throughout the world. Software and services for energy. So I joined NetSuite because we bought NetSuite. They thought I was a good guy. They hired me. In my career, I've sort of touched in all of these areas, life sciences, so hardware, software, SaaS business, where I'm currently at, but also media. And I think that's relevant because I'm guessing you've done beyond that in this room, but I didn't just bring one sector to this discussion. Did a huge IPO back in '99 as the VP controller. I worked at Genentech, which is was the largest biotech company in the world until it got acquired by Roche, and started off my career at Deloitte. So that's me. So that's one of the dimensions I'll bring to this. The other is that I work at NetSuite. I worked there for 6 months. And what I do is I actually spend a lot of my time on product, figuring out what we're going to build and build better into the product. But I spend a lot of time with my companies and my customers and prospective customers. And what I see and what's relevant to this and some of the challenges that the CFOs face is hypergrowth. And what does that mean? It's just greater than 100%. I'll define it that per year. And we see this a lot. Some of our customers include Box, Square, Uber, other. These are very large customers growing. I could bring Central. These are just ones that I can think of off the top of my head that are growing at astronomical rates, and that brings its own set of challenges. That leads to a very strategic view, in that they're growing so quickly that the strategy didn't get that old. They're really thinking about how they can attack this market. But they're sort of so focused on just the day because they can't keep up. So that's obviously a challenge for the CFO. I deal with big companies and small companies. We sell to Qualcomm, huge company, selling semiconductors, all the way down to 20-person startups. So we sell those. I was just on the phone around lunchtime talking to one of those. And we do those equally well because what we do in the cloud. But those obviously have different challenges for the CFOs as well. The CFO of the 20-person startup does something very different than the CFO of the Qualcomm. And very diverse. So I talk to a variety of companies in a variety of industries. Hopefully we'll talk about, we'd love to hear from you about what industry you work in and how that affects the CFO. Process. So we go everything from little or no process, and sometimes that's actually quite good, right? Because these companies are growing so quickly that by the time they establish a process, it's broken anyway. Frankly, they're winging it. And sometimes that works for a little while, obviously, and then they get into some troubles, and that's how then they spend more time on it. But in almost all cases, large or small, what we see is management teams are starving for real-time information, and that's where the CFO can help, right? So if I can, and we'll talk about some of that real-time visibility and how that can help the CFO partner. NetSuite. Does everybody know who NetSuite is? Because I actually don't want to spend much time on this. Everybody knows NetSuite, the largest ERP cloud vendor. Been around for 15 years. Public about 7 years ago. $7 billion market cap. So these are some of the big names. We work with small companies as well. 16,000 customers. Last quarter we had $100 million in revenue. Doing extremely well. So thanks to hopefully some customers in the room. So before getting on to the topic, I got a little touchy-feely here. Whenever you got Deepak Chopra, it's touchy-feely, right? So, but it's a great book called Superbrain. And it's very simple. This quote, I just took this one piece, which is the human brain is the unique things about the human brain that it can do only what it thinks it can do. Sort of sounds obvious, right? Self-fulfilling prophecy, confidence, whatever it may be. But it's actually scientifically proven. This guy's a MD, PhD from Harvard who discovered the first Alzheimer's gene. And why that's relevant to leadership is because if we can't do it ourselves, we can't say we can do this, right? And we'll talk about what it is and the hows, but then we can't lead. And we can't lead our teams, and we can't lead the other members of the management team. So just a quick thing, but it's actually clinically proven. So I thought it was relevant. Now I'm going to talk about the challenges a little bit, and it really starts with one that maybe some of you have heard. And maybe it's you or someone on your team when somebody's arguing with you about them, when they disagree with your point. Do you really understand the business? Does finance really understand the business? And I'll be honest with you, there have been times where earlier in my career I actually didn't, right? I was junior enough, I really didn't quite understand the per unit economics or what made a business work, or people on my team have not. I think it's critical as we go through here not only to think about how to better align with the management team, but how to better align with your team to allow that to happen. Because at the end of the day, you can only do so much as a CFO. If your team doesn't understand the business, it's not going to work. So I just thought it would be silly not to talk about the success of aligning with the management team without just, first of all, saying that if you're going to align with your peers on the management team, you better the CEO will have a big say in that. So just pointing out the obvious. I can actually, let me pause here for a second and just say, I've had CEOs who have supported this kind of collaborative thing where, go to the VP of marketing and go to the VP of sales, and there have been others that have not necessarily supported that. Has everybody always had the experience where, the CEO is very collaborative to building the team, or has it been sort of a situation where the CEO has been, kind of has prevented that to some degree. Does anybody have any thoughts on this? Yeah, both. Right. Right. It's obviously quite a bit more challenging when the CEO is not supportive. So we'll try and talk a little bit about how to deal with that. It clearly takes time. I was CFO of a company for 5 years. It took about 4 of them to get through some of that stuff with my last CEO. So how do others think we're doing? Basically, I guess we can go through this, but we're basically getting a C grade. I don't know what else to say other than you can't keep everybody happy could be one take on this slide. The other take could be that we need to do better, and I think we can as a finance function. I think in general, I've always found there was always room for improvement, and we'll talk about how to do that a little bit. How do we think? What do we think are our challenges? And really, number 2 on the list is how to balance the needs of all the stakeholders. So clearly, investors, right? That's one, right? You got to keep them happy. You got the board, and then you got the peer group. And I think aligning those is obviously a challenge. But I think the one we're going to talk most about in terms of aligning is the stakeholders involved in the management team today. So where do we spend our time? We spend our time probably on the golf course a little bit too, but it's not on here. But interacting with decision makers. So that's where we spend our time. And as some of these kind of point out, I kind of liked these buckets particularly because as we go through here, I think these are actually really kind of cool. So, some of these are really going to be relevant to some of the hows that I'll talk about in a minute. But bottom line is we spend our time with our peers trying to figure out how to better operate the business. Just a second on the global, since that was about a third of the attendees today. I think I've experienced this, right? So you open up subs, you start spreading out everywhere. People are all over the place. You have a tax structure. It's hard to get the information, right? It's hard to roll that information up. It's certainly not real time. It's tough to get the numbers very quickly. The data starts becoming very siloed very quickly, and you lose visibility of what's going on at the subsidiaries. So big problem for us. So how do you get real time? How do you align management? How do you get metrics that aren't just North America or how do you, or South America or whatever, EMEA, whatever it may be. So I think just a quick park on global because it's I guess it's an oversimplification to say, or an obvious statement to say, once you go global, things get a lot more complex fairly quickly. And we see this a lot. I see this a lot with my companies. Do very well, clicking along, everything's easy. In North America, they start to go global, and bam, the world gets very complicated. They need more from us, but they need a lot more from an infrastructure perspective as well. Again, revolving around things like legal and tax and whatnot. And that's where the CFO, I think, could be very helpful in facilitating that process. Okay. Before we get into some of the solutions, I just thought with this group with a whole bunch of CFOs sitting around, I just don't want to skip through some things around setting the table, and some of this stuff you can actually set up, and some of it you're just given. The first one being board governance, right? So we probably don't have a lot of say in the governance thing, and that's probably determined a little bit above us. We can influence it a little bit on the financial side, to be clear, and the process side and the compliance side. But obviously, some of the other sort of stuff that goes on, certainly I'll speak for myself, you have only a little bit of an ability to influence it, and so, but this can actually work for you. So I've actually had that work for me where that helped me get aligned with my management team members. We said, well, that doesn't work. We've got to figure out how to get together to change the way the board is operating on that. Investor expectations, obviously, when you come into the job, you can, again, this is another area where you can align with your other partners. If the previous expectations are so high and your guys are telling you there's no way, it's a good way to align and reset expectations so that you can get to achievability. Politics and baggage, these exist. Worked for a company that had been around for 20 years. You walk in, there's a lot of that stuff you just got to deal with. And I think some of these processes actually, one in particular, I think will help deal with some of that to some degree. Again, transparency generally always helps. And I think this is something we did at my last company. It was a culture of say-do, right? So if if my partners on the management team say they're going to do something, they do it. And that became at first it wasn't. It was just like we just say things, right? But it became very much of a culture of yes, we're going to say do, and that's how we quadrupled the size of the business in 4 years. So very, very, very important. But that only works when the board does. When the board does pay for performance, right? So that was the other thing we figured out is the management team was like, yeah, I'm not gonna keep my commitment if the reward's not there. And then focus on outcomes. And this will be part of some of the discussion and certainly how I've run it and how I've seen others of my mentors run their processes. But I thought it was funny. I was at a 250-person company the other day, highly successful, and they're so focused on outcomes that they don't actually. You're only allowed to work. You can work on whatever you want to work on, and you don't have to work on anything you don't want to work on. And there's no project planning or otherwise. It's simply, these are the outcomes that we've all agreed to, and they allocate resources and make sure they get enough people to work on what needs to get done to get the outcome. It's an extreme case. I'm not at all suggesting, every CFO in the room is shaking, but it was an interesting extreme, and they're doing extremely well. I think at some point it doesn't scale, but I thought it was an interesting reminder that we need to be focused on outcomes, and it's a great way to align with your partners, and we'll go through in a second. Let me just stop here again real quick. We got questions at the end, but let me just see, how is it, I mean, is this I know we haven't gotten very specific yet, but I wanted to just see any thoughts so far on how we're doing. Bernard, do you have any thoughts?
Yes,
Yeah.
I think that resonates very well with what we've seen. I mean, my experience has been with GE, so it's perhaps at the other extreme of the scale. But you have their different CFOs in different segments, in different industries, and with different set, as you mentioned. So the CEO, the CFO could be very much in line with that, with his own CEO, or he could have been parachuted there. And he's ending up, the CFO ending up with a CEO that he doesn't know, and he has to manage up this new CEO. So all those dynamics are very reflective of what I have experienced. I don't know what the rest of the crowd has.
Yeah, well, I would imagine GE's, we'll get to it, but establishing a few priorities. I mean, does GE have, do they have 1,000? I mean, they could literally have thousands of priorities. Do they boil them down to a few, or how do they set, at what level are priorities set at the management level? Are they very granular? Because, yeah.
Yeah, I think they had a nice way to cascade down those high-level objectives. Mm-hmm. And then being a recipient of those goals and objectives, we had a nice way to drill down, cascade down through the different levels and make sure that the different organizations understood clearly what is their goal and objectives. There was also a nice way of rewarding the right behaviors when you demonstrated those right behaviors.
Great. Well, anybody else got anything to add? Actually, would love to hear. Great.
Well, GE is a different story. If you bootstrap high-tech startup,
yeah,
$5 million in copper, you can't have GE.
Yeah. So, what have you seen? What's worked for you, Harry?
It's a new day every day.
Well, okay. I want to come back to that in a second because this is a good debate. So the first is the approach. Okay, so this is Harry. You're going to come at me now. This is not going to be good. Everybody, just bear with us. Okay, so first of all, Deloitte. I just had to get one consultant's quote in here, and they're always cute about dancing and stuff. But basically, it's really about if people buy into your process or not, right? That's at the end of the day what you're talking about. And frankly, let's face it. Not everybody does, right? Some do, some don't, and you got to figure out how to get the guys that don't, or gals that don't. Okay, all right, Harry, this is the one. So, my strong belief is that you need to build a real long-range plan. Okay, and it's not a spreadsheet that you did in your office and you ran by the board one time at the close session, okay? That's not it, right? My view is it involves the whole team. And I know, Harry, you're quaking in your boots. It's multi-year, right? So it's wrong as soon as you finish it. I know, all that. But I think it helps identify some of these things, right? It helps you think through what the key input metrics and the key output metrics are. What are the resources we're going to bring to bear? What is important to us? And what are is the profitability? What are the other key metrics that we're looking for in the business? Some are obvious, some won't be, right? I mean, utilization, I went to the PSA demonstrate utilization, these other things depending on what you do. I do think things like looking multi-year. Frankly, almost every company, I don't know if you've had this experience, almost every company, everybody's trying to maximize profitability in the current year, and they're not bringing the salespeople in next year to deliver the growth, right, in this year to deliver the growth for next year. It seems like every company can't do the math on that. I don't know. And this helps do that. And some of that's just a rolling quarter, but that you don't need a long-range planning process for that. But you get hopefully you get my drift on that. I do think that if you keep updating this thing a little bit, you don't want to be doing long-range planning constantly, but as you go to the next year and you set budget targets, now if you're a public company, we didn't have any public companies, obviously they're set obviously quite a bit by the street, but in a private company, when you show up and you say to that business unit guy who helped you build the model, yeah, your target's 200 million, he's not going, oh, where the hell did you get that number? He says, you helped me build it. We talked about pay for performance. I mean, that's a whole other session here, but I do think it's one where we've got to show that in the long-range plan. Again, to the point of short-term focus, I thought it was interesting. You kind of do periodically pull up the nose of the plane and say, okay, how's this all fit? And are we going to get to that thing in 4 years? That goal that we have in 4 years. And then I thought the last one was very interesting as well. What I find is I found a mix of this. So sometimes when you're in a situation where you have a new step-out opportunity, whatever you want to call it, a new strategic direction, there's no framework to model it, and this I think gives you that. It gives you a framework to think about that and figure out how this affects your business. And let me just quickly mention my time at Genentech. I will say I was not the guy making the decisions. I was the quant jock doing the spreadsheets at that time in my career. But Genentech had always been sort of not in the oncology business, decided to get into cancer vaccines, and obviously it was change the company. That's how it became what it became in terms of value creation. And we needed a method to do that. We had a whole long-range planning process that was beyond the scope. It would take us hours to talk about, but it was very helpful because it was a framework to make decisions as we thought through whether we were licensing, whether we were buying, whatever we were doing in terms of all of those permutations. But very helpful. So this was a stopping point for me. Harry, you chimed in, so I'll just ask your thoughts on this. I mean, apparently you don't think this has value. Is that right?
No, it's perfect. The thing is, I will go further. Like, constantly look at your plan, tweak it. Because if you don't do it, you'll fall.
Okay. I think we're talking.
Just be flexible. Because what you're going to plan is a guarantee it's going to happen.
Yeah, let me clarify. I should have clarified this. This is, again, a very tops-down. Your bottoms-up we'll get to in a second, okay? Because this is a very strategic view of the business on a strategic lens. So I should have said that. It definitely has the key metrics, but it's not, we're going to hire Bob in 3 months and, whatever. We're not doing that here. So, yes, sir.
It strikes me that, I mean, when you started saying building a real LRP, one of the things that this helps do is sort of identify whether it's explicitly or internally to each individual on the team, whether or not they really want to sign on for this plan and whether or not they really think that they can actually function in delivering it. And so over the course of maybe 1 or 2 iterations, you'll have some shifting because if you don't have the team involved but B committed, you're not going to get there.
I love what you're saying.
Spend most of your time trying to figure out how to get around the problems and the obstacles that are going on.
Totally love what you're saying, and in fact, it does also allow them to see the art of the possible, right? How much money can I make? Wow, holy, wow, this is a big opportunity. But to your point, some people are going to go, wow, and it actually helps you see that too. Oh my God, that business is going to be a $300 million business. That guy can't run it, so I got to be thinking about. I love that. And part of this process, you got to benchmark. I'm not going to really go through. We at NetSuite kind of look at these all the time, how we're stacking against other SaaS companies. There's not an epiphany. I thought the third bullet was what what was most relevant here, about removing the subjectivity, right? We all use this, right? Well, look, when we build our business model, we're only going to spend this much in sales and marketing, we're going to spend R&D, you know, that typical thing. But it is very helpful as you're going through this process and getting aligned with management. So back to your point, Bernard. I think this is actually a copy of an actual slide that I use, what we do is we sort of map. We map the growth in these 3 buckets. I think probably some of you use this. Some of you don't probably think it's very good, but it worked very well for me. We want to increase wallet share from our existing customers. We want to acquire new ones, and we want to drive efficiency in the business. That's how we make money. Okay. So how are we going to do that? Here's the critical few priorities. Develop new services. I made these up. These are generic, but my point is, and this is how we articulate our plan. I love what Bernard said about cascading down. By the way, does anybody use anything like this, or you use a better way, or yeah?
We use the same thing.
Oh, great.
A few large strategic items, we move them down to, we call them initiatives rather than priorities. Those initiatives are assigned to an executive. The executive then goes back to their department and cascades them down what needs to be done in that department to make it work, and then we're judged on it by the metrics.
Great. Somebody else raised their hand? No. We call them what's, hows, and who's. So to the how point, these are the what's we're going to do, how are we going to do them, and then the who. It drives accountability, and it helps everybody get aligned. And everybody's involved in this process, and we get clarity on how to achieve the financial outcomes that we're looking for. There's a whole build on how this all comes together. I'm not going to go through these slides. That's not the intent of this, but how each of these priorities ends up leading to the outcome that you have. This was a revenue build. This is an expense build, where we're going to make our investments, and how does that lead to our expense level in the next year. Again, all just to show you conceptually. Again, hopefully this is resonating to some degree. Let's face it, I'm going to flash this slide. It's what financial outcomes are we looking for? That is really how we're going to be measured at the end of the day. We won't ever lose sight of this, but it is very, very, very important. Okay, now we'll get to, how are we doing on time? Just, what time is it? Okay, great. We got to go faster here. So this is how we at NetSuite identify key business processes. This takes you all the way from really kind of the start of the process, where you're kind of coming up with a concept, branding it all the way through to customer support. So I'm not going to go through each of these buckets, but what the point of this slide was to say how many opportunities in these business processes, once you've identified them, there are to partner. I mean, I'll pick a couple in a second. If you double click on the revenue ones, we break these up into pieces. That's what ERP companies do, right? Lead opportunity, but just you order to cash, right? We take order, we fulfill, we invoice, we collect, ... So now you break it into manageable pieces. You break it down. You go help your business partner do his job better, his or her job better. And 2 examples are, and these are again high level, but I just wanted to just sort of show the sales function. Okay, let's just pick that one. Okay, your sales guy. Right, you're like, give me more revenue, and he's going, get out of my face, right? You go, okay, well, let me help you, and you help him with this process. And almost every sales guy I've ever dealt with wants help making this order process better. So if you can spend time with him, and his team, you can align. This actually is a really good time to just point out it ain't you. You're probably not getting into the orders. It's your people, and they got to understand the business. Another one is just the manufacturing procure to pay, right? Your ops guy, your manufacturing guy, your whatever, VP of operations, helping him keep his vendors happy and automate the process. Importantly, automate the process, right? Any automation he can do and you can help him with, whether it's this system or that system. And we'll come to that in a minute. Right now we're going to come to it, which is the systems. This is where I'll say we do shine at NetSuite. The ability to be very flexible in the cloud, quickly adapted. The data's all in one place. We don't get sort of multiple sets of books. We got one version of the truth. We can deal with complexity as we roll out subsidiaries. we can deal with high performance. We have customers that do all this stuff. This is what we do with our customers today. Very important from a systems perspective. You all probably are dealing with things that look like this. Now I stole this slide and it is a NetSuite slide, but it is actually what I see very frequently. It's multiple in-house and/or best-of-breed apps tied together with some cases bad APIs, some cases even good APIs, but you're tying together two systems, and we bring it all together. And this works. I see this work every day. It does help. What do I look at? And this is my point, is that this helps you align with management. I get everything real time. This is how I run my business. I have a global view of the business, not just North America or whatever. I look at billings and bookings, billings, backlog, essentially. I can look at it by segment, by vertical, or all the KPIs. So this is what I look at every day when I come in my office, and it helps me run my business. And I think this is critical to aligning with management. Key things that we look at, and yours will be different. This is now a little focused on SaaS, is churn and downsell, although we're always worried about customers that churn out. So key metric for us, this helps me align with my sales group. Sales and marketing efficiency, I'm trying to see what our spend is doing. So this is a fun one, right? So what CFO doesn't want to know that he's getting a good return on his investment in sales and marketing spend, right? So we look at this very closely. It helps with the dialogue, right? So I know what my sales and marketing guy or gal is doing, and we're having a dialogue around that. Let me just stop here for a second and go back. The point of this was around optimizing critical processes. So, anybody? Any thoughts on how to better do this?
Sure. I think the next slide is really great. Not this one. The next.
Yeah.
At GE, we used to call it wing to wing from the aircraft engine business. From one wing to from the left wing to the right wing of the aircraft, which means from soup to nuts. And here, I mean, what you're offering is thought. I mean, you're pushing us into thinking about the organization from soup to nuts, and then focus on the processes that really have an impact on the bottom line. So it looks like you're driving us in the right direction in terms of thought and action items.
Did others have success doing these kinds of things, or did people say, go get lost, go back to keeping the books? Yeah.
So you can do that, but what happens sometimes is people will think that some things cannot be changed. And so they can say one of the boxes there is untouchable for the wrong reason. So typically you go after the low-hanging fruits first, and eventually these ones.
We see that a lot. Get the wins, get the quick wins, and then get the CEO behind it, right? And then you can make an impact. That's certainly one. You were going to say something, Bernard?
Yeah, the CEO behind it, because you have a process view of the organization, while the different functions they all think individually in terms of function. So they say, but where do I fit there? So we have to help them embrace that change. It's a completely paradigm shift here. I mean, here you help us think in terms of process, while the different functions still think in terms of their product alignment or their functional alignment. So I think as Francis said here, there's a lot of change management that needs to happen with implementing that.
Yeah, I like because actually the other thing about it is if it's part of the planning process, and this particular manager who's saying I don't want to do it, if he gets budget for it, he's probably going to be more inclined. So you have to make it a priority, and you have to give him the budget and the headroom to do it. It wouldn't be a presentation without a Jack Welch quote, right? So I don't even know what this means, but I thought it was cool. Anyway, I I actually, what I think he's saying is it's got to have rigor, right? I mean, it's got to have process behind it. It can't just be, yeah, let's go do that. And I actually I do believe in that. We'll talk about metrics. This was an example of what we use at NetSuite, which is lifetime value divided by cost of customer acquisition. This is the meta metric, right? So, and the reason why it's relevant, what the hell, that's very complicated. Whatever happened to gross margin, right? The reason why it's interesting, I think, back to this getting everybody aligned, and I'm not going to go through this whole thing, but there are various sales and marketing is in here, revenue is obviously in here, lifetime value, sales is going to be in there because you gotta keep them from churning, development's in there. It's kind of a meta metric not for investors because that's how they it's a cheap way to value the business, but it's also interesting from a management alignment perspective, and we use it for that. Okay, these are going to be fairly quick because I don't know that I have any epiphanies for you how to budget better in terms of just the process. Yeah, you integrate the actuals and the budget, and we do this at NetSuite with Adaptive Planning and Host Analytics, who are here. And obviously, seeing that in real time or near real time is critical. We talked about this. I do think that this multi-year approach does drive a more rational budget process in terms of setting expectations, and the rest of it is fairly, you guys hopefully you guys are all doing this because I don't know that there's any other way to do it. Harry wants us to do it every day, but I'm not going to do that. We do rolling monthly forecast, so that's pretty good. Just real quick, what we look at NetSuite, trying to make this a little real, so it's too general. We do rolling 8-quarter forecasts, and these are some specific things that we look at. You will all have some interesting things to look at for your particular business. I know in my last company, as I said, utilization, bill rate for services, and other things around pipeline and other things are important. So actually, let me stop here for 1 second and ask a question. It's actually not in the deck, but I meant to put it in there. It's the one thing I didn't put in there, Bernard, is pipeline. How do you all how have you had success getting clarity and maybe perhaps better hygiene in your sales pipeline with your sales guy? Yeah.
The last company I joined, the biggest challenge I had with the sales guy was a different language. He's talking bookings, I'm talking revenue. We had to take a step back and define everything and educate the whole organization on what the different metrics were and what they mean and why they're both important. Once we did that, then we were back. Can't speak. We were able to work together and figure things out.
Is that conversion, was in that particular business, was the conversion from bookings to revenue complicated, or was it straightforward?
It was, the timing was the issue. Knowing when the bookings would become recognized revenue.
Yeah, I would say this is a common one. I mean, we do complex rev rec at NetSuite, both internally or with our software. And by just for fun, for the non-SaaS companies here, that Wall Street looks at our P&L, says that's interesting, and they value us almost strictly on bookings. So it's an interesting. So it actually helps us internally, and that the sales guy, we talk to him about bookings because we care about profitability, please. But
tie into your reported financials, and it's a challenge.
Yeah, absolutely. Others have any thoughts on this? Because keeping the pipeline clean has always been a pain in the butt.
Again, working with a SaaS client, exact same thing. Just sold a $100,000 piece of business, and in fact, they're going to pay us in 2 weeks. I said, that's great. So how many? So what's the revenue look like? 0. And getting past that, it was an education for both the CEO and the board of look, you're building subscription-based business. You're building layers. It's a wonderful thing. Investors will value it, but it's not revenue when you sell it. And once you get past that, you're right. Looking at different metrics for different reasons. It comes back to the big performance. If you're going to set your sales force on revenue and they don't understand how you get there, it's not going to work.
Well, that and your board, to your point, you come to the end of the quarter. You guys are transitioning from an on-prem to a SaaS?
No, this was a SaaS startup.
From the start. Okay, we do see the on-prem software companies be trying to become SaaS companies. It's interesting to watch. I'll just say that, right? So, I'll just say that. Anyway, there you go. I think there was one more thing I was going to say there. This is just quickly. This is my Jack slide here. You got to have rigor and you got to develop a process. Harry, I put this flexibility in here just for you, right? So you're welcome. Thank you. Give me a high score in the ratings. Okay, and then we get finally to the last slide. I think we have, what do we got, 5 minutes? About 5. Okay, so I'm hoping we have some good discussion. We sort of already talked about the long-range planning process. Anybody have anything else that they want to add to that they thought was, did you have anything? No, great. Anybody on that? Going, gone. Okay. Okay, because this is a show of hand, and then maybe we can figure out why not. How many don't have access to real-time financial information? Only one guy. You can actually go right now on your iPad and figure out how you're doing this quarter? I don't believe you guys. Yeah, okay, great. How many are not? CFOs are full of baloney, man. You guys are so, there is no credibility. Well, actually, I mean, did not expect that. Well, and why not? Yes, sir.
It's only as good as how quickly things get entered. But if you make a real-time financial, you could, depending upon how you structure priorities for your staff, you've got to get certain things in quickly and other things can lag behind.
John, I think that's a good point. So I should probably have inserted near real time. It's not going to be real time, right? So I mean, this isn't a stock exchange. So be interesting if you could do it though, right? We live in a Twitter world, right? Again, maybe another question. Well, maybe just ask it this way. Anybody have any problems establishing metrics? Or are your metrics all super clear within your management teams? Yeah.
No, it's definitely hard to establish them sometimes. We're in a service industry, and other than hours, doing them by divisions, it's very difficult.
What I give you my last one because I have service. To get the guys to do we use OpenAir, but the ability to forecast their projects and then be held accountable for how that revenue came out. Nobody wanted to do that. Oh no, we can't do it. Oh, the customer won't give us that information. Yeah, right. So I hear you on that. Anybody else? Okay, this is back to that pipeline. So what is the quality of your revenue visibility? It always should be higher, right? I suppose it's pipeline again. That's really sort of implicit in there. I don't know what that says. 1, 2, 4, 5. I don't know what that last question meant. I was on the plane. I was probably drifting off to sleep. Something. Anything else that we should cover? Since we only got probably 1 or 2 minutes left. Anything else we should cover? Otherwise, we'll wrap it up. Was this useful at all? I don't care what you put on the forums. Was this useful? All right, we're good. Thanks, everyone. We're done. Thank you.